Hi, everybody. It's Peter Schiff. It's Tuesday, September 14th, 2010. Well, big day in the foreign exchange markets and in the precious metals markets. First of all, gold rose close to $30 an ounce to a new all-time record high. I think silver jumped about 50 cents. It traded above $20. It made a new 52-week high. Didn't quite take out the high from early 2008. I'm sure it will any day. The dollar really got whacked. The dollar index fell to 81 even, almost a full point. But the dollar index doesn't tell the whole story because the biggest component of the dollar index is the euro. And the euro is also weak against other currencies because of the way it handled the problems in Greece. So look at the individual currencies. Look at the Swiss franc, hit a new all-time record high today against the US dollar. It's worth more than a dollar. Back in 1971 when we left the gold standard, you could buy a Swiss franc for 23 cents. Now it costs over a dollar. The Japanese yen hit a new 15-year high against the dollar. The dollar only buys 83 yen, 3 yen off the all-time low from 1995. And of course, it's interesting the spin the media puts on it. I was listening on CNBC, and they were talking about lack of intervention. And they said that the Japanese government wasn't intervening to support the yen. Well, wait a minute. The yen is rising. What they meant is they didn't intervene to support the dollar. The dollar is what needs to be propped up. But they look at it like a strong yen is bad for Japan. It's not. It's good for Japan. When the Japanese yen is strengthening, the Japanese citizens are getting richer. It's bad for America. It's when the dollar is falling is that Americans are getting poorer. We're losing purchasing power. We're getting a pay cut. Things get more expensive when the dollar loses value because the dollar has less value. So you need more dollars, not only to buy more euros or to buy Swiss francs or yen, we need more dollars to buy oil, to buy wheat, or to buy all sorts of consumer goods. Americans are going to see a profound decline in our standard of living because of the weakness in the US dollar. And of course, the strength of gold is also a reflection of the weakness, not only of the dollar, but of other currencies. And also, the Australian dollar hit a new 52-week high today, the New Zealand dollar. Many of the gold stocks hit 52-week highs, including Newmont Mining, which is the only gold stock in the S&P 500. It hit an all-time record high today. But if you look at the comments the so-called experts are making on television about gold, it really kind of makes you laugh. I mean, there was one guy on CNBC, he was asked if he was buying gold, and he said no, he's not, because he thought it was overvalued. Because he said you can mine gold. It only costs $400 an ounce to mine it, but it's selling for $1,200. Yes, if you happen to own a gold mine, which most people don't. If you don't own a gold mine, it costs a fortune to try to mine gold. But the fact that somebody who does own a gold mine can make a profit doesn't mean gold itself is overvalued. I mean, how much does it cost an oil company to drill for oil? Well, if you already have the well, it costs practically nothing. The cost is finding the well. Right? That's the cost in gold, not operating the mine. Of course, there are costs there, but how much does it cost Apple to make an iPod? I mean, that's not what they sell it for, but if you want to buy one, you have to buy it from Apple. So if you want to buy gold, you need to find somebody who has a gold mine. And believe me, there aren't that many of them. That's why I own so many gold stocks. And I like to hear so many people who are confused about the price of gold. Like one guy on CNBC was saying he didn't understand why people were buying gold, because he said there's no sign of inflation anywhere. I mean, is the guy completely blind? I mean, gold going up is a sign of inflation. It's kind of like you're in a mine, you're a coal miner, and the canary drops dead. And instead of running out of the mine, you sit there and you say, why is that canary dead? I mean, I don't smell any gas. That's the point. The canary gets it first. Gold is an early sign of inflation. Also, the dollar plunging is a sign of inflation. And people who understand it's not just current inflation, it's future inflation, because the Fed is powerless to do anything about it. They can't raise rates. If the CPI starts growing at 4 or 5% a year, is the Fed going to raise rates for 5 or 6%? No. They're just going to allow the inflation. And then it's going to get worse. There's nothing they're going to do. Gold is telling you that. The foreign exchange markets are telling you that. And I'm still hearing people talk about a gold bubble. And one of the reasons they say it's a bubble is they say, look at all these advertisements on television from people selling gold. Well, there are a lot of advertisements on the financial channels. They're not advertising on soap operas or on reality shows. It's not like it's widespread in the culture that everybody is buying gold. Plus, even though we see a lot of ads, a lot of people aren't buying gold. The thing is, the companies that are advertising are so overcharging for the gold, they're ripping off their customers that they can afford these ads. It's that there's not really that many people buying. It's just that the people who do buy get ripped off, and so the people who are ripping them off can run these ads. But believe me, the ads that are out there are not evidence of a gold bubble at all. Anyway, also, I wanted to talk about an article I read in Bloomberg, again, trying to criticize the Republicans for wanting to preserve the Bush tax cuts for the rich, because, again, they said that, well, the rich are just going to save their money, therefore it's not going to help the economy, as if savings doesn't help the economy. That's exactly what we need. But kind of the irony of it is, you'll have the Democrats lamenting the fact that there's not any credit. They want businesses to get credit. Well, where do they think credit comes from? It comes from savings. So if people aren't saving because their taxes are going up, that means there's less credit available. And also, as the government is cutting taxes on the middle class, they're running up the deficit, which means they have to borrow more money. But if Americans are saving less, who are they going to borrow it from? Well, we're hoping to borrow it from the Chinese or the Japanese. It's just so amazing that people think that savings and investment plays no impact on economic growth, that it doesn't matter if we diminish our pool of savings. All that matters is we go out and spend money, which is completely absurd. And, speaking about something else that's absurd, I happen to read, somebody wrote something, I forget who the guy was on the internet, kind of criticizing me, and he was saying that I was wrong in my criticism of the U.S. for not manufacturing, right? When I say that we have to make things, and he said, well, that's crazy. We don't have to make things. It's totally fine for us to have a service sector economy. And he basically said that if I was around during the Industrial Revolution, when we started to manufacture all these products, that I would have been criticizing the manufacturing economy, that I would have said it was a phony economy, that we weren't growing any more crops, that we weren't farming, that we had this phony economy based on manufacturing. Well, the analogy just doesn't make any sense. Because remember, when we went from an agrarian economy to a manufacturing economy, we didn't start importing food. You see, what happened is our farmers became so productive. We didn't need as many people growing food because we were more efficient. We had more equipment. And that freed up labor to move into manufacturing. So we were able to grow a manufacturing sector because our agriculture sector became that efficient. And even though we were manufacturing things, we were still not only supplying all the food that we needed, but we were exporting food to the rest of the world. That is not what's happening now. See, I didn't say that we couldn't have a service sector economy. That'd be fine if we didn't have a trade deficit. If our manufacturing sector was so efficient that we didn't need to have as many people working in manufacturing, that we freed up that labor, they were able to move into the service sector, I wouldn't be criticizing it. See, the fact is, our manufacturing sector is not disappearing because it's so efficient. It's because it's so inefficient. And now we're simply importing all the things that we used to make ourselves, and we're running a gigantic trade deficit. Now, if the world was willing to give us the stuff that they make forever, for free, then I guess we could have a service sector economy. But the fact that we're running these massive trade deficits proves that it is a phony economy, because it can only exist so long as the rest of the world is willing to supply us with the goods that we no longer manufacture. You see, the service sector would be viable if we still had a manufacturing sector that was operating at a surplus, or if we could find a way to export our services to pay for all the products that we're importing. You see, we can't stop manufacturing and expect the rest of the world to export the products that they manufacture. We have to pay for those products. We have to export something. You see, my critic is ignoring the trade deficit, thinks that a $40 billion a month trade deficit is okay. Well, maybe it's okay with America, but it's certainly not okay with the rest of the world, because they're on the losing end of that deal. They have to finance that trade deficit. The world is not exporting to us for the fun of it. They're exporting to us because they hope to import something in return. The problem is that's not happening. Now, the world is going to wake up to this phony economy, and as the dollar begins to lose value, and it is doing it now, and as it begins to fall or drop like a stone, like it will, then the trade deficit is going to be that much more problematic, because the cost of imports is going to be rising rapidly. We're not going to be able to afford to pay. We're going to try to accommodate that by printing more and more money, and that's simply going to exacerbate the inflation and the downward pressure on the dollar. Anyway, that's it for today. I'm sure I'll comment again on Friday. We should probably have a very eventful next few trade